Time for another stock review. This time we are talking dogs and cats. Got some nice dogs and cats images coming up for you now. Think that they might make you go, ah. But of course, we're here to make money, of course. We're investors. Smash the like button, subscribe and ring the bell. In this review, we're going to share with you the balance sheet, the profitability score, the solvency score, the inside trading, who's buying, who's selling from the inside. We're also going to look at the website, see what's going on with the latest news, what the overview of the company is, what does it look like, some breaking news around veterinary services as well. All of that's going to be covered on this, an intrinsic valuation alongside all those cuddly dogs and cat videos as well, just to make it entertaining for you. So there you go. Now, if you are watching this video, which is silly, I don't know why I even say that, you can comment below and I will reply to all of my members personally. If you want to ask me any question, I will answer it. I do focus on the members. I do tend to read the non-members, but I reply to all of them of the members. Okay, now does this stock make sense? Can you make any money out of this stock? Well, we need to think about it right now. Can you make money? Do the charts make sense? Do the information make sense? Can you make any money from this stock? At the end of the day, we're investors here and we're looking to see if we can make some money. We don't want to get hot under the collar and start shouting and screaming like this guy here. You might have seen him on YouTube a few times. He gets around my videos quite a bit. He looks very excited. We don't want any of that. We don't want any drama. We want calm, relaxed approach. All right, so let's get straight into it. And don't forget to tap the like button and that will share this video out to more people. This is behind the scenes, by the way, on our extra channel. If you want to join us on behind the scenes, you can here and be part of behind the scenes, which runs 12 hours a day, which provides support to all our members. This is being made during a live show, so it's completely honest and real. I only invest in the S&P. I don't pump and dump the stock. I'm just here to provide a service to my viewers and my members, and it's real and genuine, and away we go. Let's start off then. First of all, what is Chewy? Is it Chewbacca? Well, remember, my godfather is Kenny Baker, R2-D2, the man inside the robot. So I know a little bit about Star Wars, hence my name, Martyn Lucas. Did you know that? A little bit of trivia there for you. Well, we're not talking Chewbacca today, unfortunately. That I'd know more about. We're talking about Chewy. We're talking about dogs and cats and all the rest of it. The stock price has been awful, though, since it started in 2019. It rallied up through COVID. That always worries me. When we have a COVID play, during COVID, it flew up because everyone was online buying their pet supplies, and then it fell away. That is always a negative. That always scares me. I don't like any stock that has a macro catalyst, a one-off event. We don't like that. Even things that are war related, if they're still doing business outside of wartime, is okay. But when you get an event like COVID, for instance, it may never be repeated again. The world has moved on. Anyway, we'll come to that later. Chewy operates as a pure play pet e-tailer in the United States. It supplies pet medications, food, treats, and other pet health products and services for dogs, cats, fish, birds, small pets, horses, and reptiles. The company was founded by Ryan Cohen and Michael in September 2011 and is headquartered in Dania Beach, Florida. The listed name is Chewy, CHWY, and there you go. Florida. 2011, if you're buying it on margin, they regard this as relatively low risk. The lowest risk on margin is 25%. So it's pretty good from a margin point of view. It's not regarded as too risky at all, despite what we've seen. So that's an encouraging sign. 18,000 employees, reasonable sized company. Sumit Singh is the CEO. Now, if you'd like to invite Sumit Singh onto the show, I'd love to have him here. Be absolutely great. We have a Meet the CEO series, which follows this one, where we do all the reviews. And if you want to invite him on the show, it's very, very easy. What you do is you look below this video. in the description, and you will find below in the description, you'll find a invite the CEO video. Now you could set up a community, Discord, or even Discord, Reddit, Facebook page, group, whatever. And I will supply you all the information like reviews, like earnings, breaking news around the stock, and they might get to hear about the coverage that we do here. And that way you can share with them and get them on the show. But also, as a little help to you as well, below the video is an invite the CEO series, a video, and you can send that off to them along with this video, and it'll explain how we do things. All right. Okay. Now then, let's carry on and look more at the business. 6.83 billion. It's a reasonable sized company then. 52-week high, $40, 78 cents. 52-week low, $15.08. So price to earnings ratio, very expensive, 173.69. Flipping heck. So price to earnings ratio is expensive. We're going to come on to the valuation in a moment. Intrinsic valuation. It does seem expensive looking at that. Anyway, but remember, people will pay more for a stock more for a stock at the beginning if they think it's going to grow, even if it is overbought at that time. Anyway, we got a bit of news here. I don't normally cover the news like this, but let me just look at this. Chewy stocks have been sliding, but fundamentals look decent. Will the market correct the share price in the future? I will cover this in a moment, but a little bit of breaking news here. It's hard to get excited after looking at Chewy's recent performance when its stocks have declined 29% over the last 3 months. But if you pay close attention, you might find that it's a key find that its key financial indicators look quite decent. I'm not going to say too much about that because until we review it properly, I don't want anyone to think, oh, great, it's good. We'll come on to that in a minute. The analysts at Morningstar, who I don't use because they're paid to promote the stock, as a lot of these analysts are, they're saying it's a buy, a hold, no one's really selling it. They're saying, the bulls say, with 2/3 of Chewy's customers base also boasting Amazon Prime memberships, we suspect that the competitive pressure from the e-commerce behemoth could prove onerous. That many expect. Chewy subscription-based model, roughly 75% auto ship penetration, should help it retain sales volume even as consumers curtail discretionary pet category spending. What are the bears saying? A slew of failed international thrusts by consumer companies, Best Buy and eBay in China, Walmart in South Korea, Target in Canada, suggest that meaningful success expanding the Chewy banner internationally is far from guaranteed. Brand loyalty in the pet food category is strong, rendering Chewy's concentration risk, 39% of sales from its top 3 suppliers, a point of concern. Okay, I do think it's overvalued so far, but I'll know more shortly. If we look here at the earnings since Q3 of 22, it's been moving up steadily, and it's been really like a lot. I very rarely see this beat the estimates of Wall Street by a long way. Which would suggest Wall Street don't know how to value this yet. They don't understand the company yet. They are really undervaluing it. So, they're saying it's expensive, and analysts are saying it's expensive, but actually it's massively outperformed the analysts. I mean, that's a huge turnaround. And we're expecting to see it go up again. And it's a cash positive company. It's making money, but it's not living up to the price expectation, or at least it alludes to that anyway. Other companies that we're in bed with: Etsy, DocuSign, Shopify, PayPal, Zoom, and Pinterest. I don't like Pinterest at all. I think Pinterest is rubbish. But and Zoom I wouldn't buy either. That was a definite COVID play. And that's why you can see it there. That's why you can see it there. People bought Zoom during COVID, which is when they bought Chewy, and now they're holding on to it. Remember, there's no dividend here. There's no reason to hold on to it. There's no dividend paying stock. You know, there's no free money, if you like. It's all growth. But is it underperformed? Can it come back? I don't know. Well, we're going to look now deeper into the numbers. But before we do that, let's go over to the website and have a little look. See if we can make any money from all our little furry friends. What do you think? We do have some news as well on the company as well that I want to share with you. So let's go straight over now to the website and see what the website looks like and see if you can actually make any money from this stock. As you can see, it sells all kinds of things: toys, treats, food, healthcare. But some breaking news, which I'm going to cover you in a moment. It's just got into the veterinary element of the business as well. Anyway, dogs, cats, horse, small pets, pet birds, farm animals, the whole flipping lot, look. Reptiles, fish, the works. All right, there's some of the products, just to give you an idea of the way the website looks. Looks fair enough. I've got it in dark mode, of course, for production value, but there you go. Let's look at this latest news, though. Well, before I give you the news, the corporate overview. Our mission is to be the most trusted and convenient destination for pet parents and partners everywhere. We view pets and pet parents as family and are obsessed with meeting their needs and exceeding customer expectations through their interaction. I won't go over all of that, but if you want to pause it there and zoom in, you can, and you might want to get some extra information. Latest news, though, they're moving now into the veterinary space. Just happened just a few days ago. We announced this. Chewy is combining its acclaimed customer focus with excellent veterinary medicine to create an innovative healthcare experience that takes care of pets, parents, and veterinary professionals. Chewy, whose mission is to be the most trusted and convenient destination for pet parents and partners everywhere, today announced the launch of its pet health practices under the brand name Chewy Vet Care. The first practice will open in South Florida early next year, with additional locations launching throughout 2024 and offer services including routine appointments, urgent care, and surgery. The practices will be powered by Chewy's custom-built open platform that can seamlessly be applied to Chewy Vet Care of third-party partner practices. Interesting. Well, without further ado, what's really important then is to get into the money. Can we make money from this stock? Can we turn the printing machine on? Does the money add up? Does it stack up before Mr. Jordan Smith gets all his credit card out to buy this? Let's see if it actually makes sense, shall we? All right, let's get straight into it without further ado. Have you tapped the like button yet? Have you done that? Have you subscribed and rung the bell? Have you done that? All right. Okay, here we go. Let's start off by looking at the intrinsic value, which is accurate. Valuation, undervalued by 30%. So despite the earnings ratio, I'll come back to that now, so I'll show you what I mean by that. Despite this valuation here, price to earnings, because that's effectively the price that you're paying to the earnings you're getting. 173 sounds incredibly expensive. However, people overbuy new companies, expect them to grow into the future. But also, you can have a 25. I will overpay for a stock that I think is going to grow. But also, when you look at the price to earnings ratio, it sounds a lot, and it may be a lot, but you have to compare it to the competition. That's what it's about, right? Because you can't compare a pet business to Tesla, right? So Tesla has a much better valuation than this. Does that mean you should buy Tesla rather than this? Not necessarily. You've got to compare this to another pet suppliers. And I'm going to give you the links for that in a minute. So you can go and check their balance sheets out, their numbers, using my software that I'm providing here. And you can see which is the best buy. So if you like this sector, You might prefer the competition because their price to earnings ratio is a lot better. That's what you need to go and check, all right? But anyway, right now though, the price to earnings ratio, the valuation would suggest, and it looks pretty accurate, that it's undervalued by 30%. Good. Best case, 47%. Worst case, 10%. Valuation, good. This is a buy from me at this first stage. At this first stage, and it's not enough, this would suggest it's a buy from me at this precise moment. Not yet, but so far I'm giving it a green buy, okay? Let's move on down. Let's run the back test and see in real time how the price correlates to the valuation. 1%, you might want to pause that there and take a closer look at that. Fundamental analysis, Q4 earnings, what it's all about, where we're going forward. With a strong finish to the fiscal year of 2023, Chewy impressed investors by achieving a 10% increase in a year-over-year net sales, earning $11.15 billion. The fourth quarter alone saw net sales jump by 4% to $2.83 billion. The company's gross margins topped 28% for both the quarter and the year, indicating an improvement over the previous year, while adjusted EBITDA margins also grew, reaching 3.1% for the quarter and 3.3% for the year. Additionally, the pet retailer generated over $340 million in free cash flow, marking nearly triple the amount from 2022, and anticipate strong free cash flow moving forward despite expectations of modest industry growth in 2024. Chewy projects continued margin expansion and free cash flow generation backed by its scale advantages and expansion offerings like Chewy Health and sponsored ads. It's a buy from me so far. Things moving in the right direction. I like the guidance. What about the revenue? Okay, the revenue, most recent range in January 2024. We've just seen that. Revenue is up. And it's up 1%, and we're expected to carry on. We're expecting a bit of an S-curve, though, in 26, not 25. Could be worth a buy. That looks good. Operating income, massive improvements expected. S-curve, definitely. Net income, up 247%. The net income is up 247%. That's very, very good. Expecting that to increase going forward. Free financing cash flow, $71.6 million. Operating investing cash flow, which is a positive number, is down 25%, which is a positive. Operating cash flow, 486, that's hardly changed. Let's look at the balance sheet. We've got $3.2 billion in assets, $1.1 billion, a third of our money thereabout in cash. That's looking good. 35% we have in cash. That's looking good. Liabilities, 2.7. It's a bit high in liabilities. But I can see now why they're saying this is a good buy. It's under the radar. There's no long-term debt here. There are some accounts payable, but we can live with that. No long-term debt, no short-term debt, just accounts payable. So let's see what the margins are. Margins are 28% and increasing. Operating margin is flat at the moment. Net margin is flat, but we're expecting that to increase end of the year into next year. ROCE is negative. ROIC is negative. 1% ROA. ROE is 12%. Okay. I bet the balance sheet looks good and the profitability will be okay. Yeah, there you go. Profitability is 46% and things are going to improve. The balance sheet's 51%. It's because of those accounts payable, but no long-term debt. We can pay that off. That's no big deal. 51%. It's a buy from me. It's a buy from me, definitely. Lowest 7%. Okay, 7%. Worst case scenario, we only sort of 10, 12% in the S&P. 65% on average 355% on the best. Definitely a buy from me. Competition. This is where I said about you can comparing the competition. I'll give you the links in a minute. You can go and do that. Right. What about short interest? Blimey, look at this. It's a heavily shorted stock, 24%. So this is the sort of stock that can short squeeze with volume. Have we got the volume today? Let's have a look at the volume a minute. Let's have a look at the volume. 24% short interest, but the volume today is, let's have a look. Average volume is 10. Today's volume is 2. So no. Not enough interest, but we do have a lot of people betting against this company, probably because of the loyalty thing we mentioned earlier. Very hard for a new company to take space if it's already got loyal customers. People with their pets are very loyal, obviously, but they're moving now more and more in the veterinary into the veterinary sector, so that could generate more loyalty there. But yeah, certainly a stock that has a lot of short interest. So with some good news and some major news, a major catalyst, this stock can short squeeze. But we've got nowhere near the volume right now.
Let's get Cramer's Mad Dash countdown to the opening bell.
Carl, sometimes a piece of research catches your eye, and it just says, let's focus on this. Beast and Barclays, the dog days are over, saying that it is time to buy Chewy. That's hold to buy, in part because it looks like they're finally getting back on track in growth, but also because the stock's just gotten too cheap, even though Amazon's been gaining shares. And remember, this stock was at 118 in the end of 21 when the humanization of pets thesis was at its highest. I like the call. I had management on, and they're doing a lot more things. They're doing insurance, and they also have ads. And ads, it's just like Netflix. People don't mind to see ads, but it certainly boosts the valuation. So I like this call, Chewy.
There's an interesting call this morning out of Citi about the low-end consumer. Watching delinquencies, excess savings having eroded quite a bit. Is Chewy highly exposed to?
Well, I think yes, from the extent that Amazon's a trade down from Chewy. It means Amazon's more mass. Chewy has a lot of the more expensive things involving a pet, but if the company stock hadn't dropped to this level, I would be a little more, let's say, circumspect. But at this level, Chewy's good.
There we go. But of course, you might regard whatever Jim Cramer says to do the inverse. He actually has his, well, he doesn't have it, but there isn't a Jim Cramer inverse ETF. So I wouldn't use that as financial advice, but there we go. Excuse me, I got an itchy eye. I apologize for that. Over the last 90 days, the sentiment was 65% positive. 61% over 30 days. It's now moved up to 66%, and today 100%. All good news today. Things are improving. The stock is too cheap according to that. Look at the valuation that I've done, the intrinsic valuation. The short interest could create a short squeeze. So what do I think? Let's have a quick look how it compares to the S&P just for a moment. If you look at the S&P right now, this is how it compares. Chewy is in blue. You can see that catalyst there throughout COVID. I don't like any business that thrived on that unless it holds it, and it didn't. I would have liked to have seen it carry on. It didn't. When COVID went away, people started going back to their original things, and it's never recovered since then. But is it too cheap? Well, intrinsic value would suggest it is. The S&P, as you can see, is in red, much more stable. S&P would have returned you 17,000 from 10 in the last 4 years. 10,000 at Chewy would took you down to, you've lost nearly 60% of your money, or thereabouts, not far off, 55%, but now worth 5,486. Anyway, let me give it my final thoughts on it. Do I think that this is a good buy? Well, let's take a final thoughts on it, and let's decide whether that we can invest in this stock. So let's do that right now. Well, the valuation would suggest that it is overbought. oversold. It would say it's got a lot of short interest, but we don't have enough volume to drive it up. The balance sheet is good. The profitability is good. The margins are good. The revenue is improving. The operating income is improving. The guidance with the earnings is improving. Everything about it is good. I would say this is a potential buy from me. I'm concerned about the level of insiders selling though, but then that was unclear when we looked at that. What I am worried about is the short interest, but then the short interest is where we are today. If any good news, you could get a short squeeze. So I'm going to stick with my original thought of a buy. So click above my head. It's a buy from me. If you want all the links, down below in the description are all the links as well. And over here is the extra channel as well. This is the extra channel which runs behind the scenes 12 hours a day. So in between the main shows, you can keep up with what's going on and so on and so forth. But for now though, I'm going to put any information or the investor relations or anything. Sorry, I completely forgot what I was going to say there. Any further information over here, all my reviews, I've done way over 100 reviews now on Alpha Spread. Go and check that out. All my members will be able to use my software for free, or you can get a premium service where my membership, the discount you get is so good that my membership will work out completely free. So there you go. There is my review on Chewy. That was for Rallo. I hope that was useful. I think this is a buy. I would like to see a catalyst for some good news, and then the stock could pop, maybe a short squeeze with a good amount of volume. But there you go. Above my head, down over here, and over here. Until next time, as always, it's a buy from me. Take care of yourselves and each other.